Vol.Land has released 2 exclusive promo codes just for our community. Get 50% off your first 3 months of the VolHacks tier, valid through November 30th, 2025, or get 25% off any Vol.Land tier for 3 months. Use these special codes at checkout. Check out Vol.Land at www.vol.land.
Samantha, great to see you. How are you doing?
I'm doing well. It's been a fabulous collaboration. You and I have actually not even butted heads yet. Like, I love your, dealer flow backdrop to all the other things that I'm doing, because I love to integrate quant into my kind of all of it, all asset classes, all time frame backdrop. And you and your team have been contributing at LaDuc Trading for our members in our Slack workspace. So that's been, phenomenal added value as well. Some are more quant focused than others. Like I said, I use it as like a tool in the toolbox to round out a holistic view. So you've just been fabulous value add. And now you've got your tool redefined and some VolHacks that I'm excited to have displayed here, so we can dig into those. And as a team of contributors, we can become power users of these new VolHack tools. So Hunter, hello.
It is good to finally meet you.
Yes, exactly. Very much so.
Yeah, I think Hunter has started contributing into the site, providing the zero DTE updates. We've been having some, we had a pretty successful zero DTE trading session today. I think Hunter's kind of keeping his profits right now. So I don't know if we're going to get another trade today, but no, it's been great. And as far as our collaboration goes, one of the first things you told me is, here we go. We have our Vanna charts. Here we have our gamma charts. Here's my zero DTE charts. And you astutely pointed out that people have no idea what this is. So,
Some people, no, the sophisticated retail and institutional who trade, systematic flow absolutely know what this is. And they trust, the quality of the content that you have in this engine. But for retail, and I bridged that gap, right? It needed a little bit more comfort and ease of use. So that was when we came in and kind of said, "Ooh, this we would like to have you do this."
Yeah. I mean, when we started collaborating, we're now affiliates for each other, and I don't focus too much on the macro, and I'm definitely not as cross asset focused as you are. I generally focus on SPX, but you do a lot of cross asset work, a lot of bond work, all that kind of thing, and so, I found it very, very a great synergy. And no, we haven't butted heads yet, But,
no, I love it. And this is the tool that we can use to kind of aid in both short, but also intermediate timeframes. And I think there's been this well-established zero DTE wave, but that doesn't necessarily mean that everyone trades on a very, very short duration. So I get the ones who can, but for the most part, swing trading is my bread and butter. So that time frame of zooming out and doing multi-week, and I know your SPX trading for the most part is also swing, but I'm saying this is a really good feature add for those who are not just focused on intraday trading. Yeah,
agreed. And especially, I mean, intraday trading, Volland helps quite a bit, as well as Hunter would attest. But I do myself. I like swing trading. I don't like to sit in front of the computer and have anxiety. I'd rather not be able to sleep from anxiety. So how about, so that being said, again, you had suggested, you said, I wanted something that, that simplifies all these Greeks and all this option terminology. It's a little too wonky. It's too, and I understand, and so I tried to put this into a more retail friendly, concise widgets that people can use in order to inform their trading. So let's get to it. I am going to present these to you as the muse, you could say, of these widgets. This is mainly for kind of a bridge. I mean, we're trying to shorten the learning curve between being a Volland, super user and not having a subscription, right? And at that time, not long ago, there was nothing between that gap, and except for an academy in which you can learn and be confused in a lecture way instead of just a chart way. So the first one I wanted to present is this quad screener. We have a, we use Vanna in our exposure charts and kind of in our lexicon as a help for direction, right? Volatility will drop, so Vanna being large, particularly positive, will be very bullish. Vanna being large negative will be very bearish. That's tough to read on a scope. So what we did was we put in here the quad screener, and this on the x-axis will show you over the past 6 months, are we at like a top Vanna kind of area, hence the direction here being 1, or are we on the lower end, and that direction here would be -1. So if you're at 1 or -1, that is the highest or lowest that stock has been in Vanna over the past 6 months, which, we have found that is a good indicator of bullish and bearishness. So for that reason, I mean, we put this in here. You can put a number of stocks in here. We have SPX, we put the Mag 7. I think I accidentally left Johnson & Johnson in here, but hey, it's in here too. Microsoft is here, Meta is in here. So these are kind of just, you could we put crowdsourcing here. I think that was for the benefit of a prior thing. So, I mean, we can put in over 1,000 stocks. I mean, do you have any stocks that you might want to see in the quad screener?
Oh my goodness. Every single day in the live trading room, we come up with potential plays to see how they're doing as it relates to option flow, to see if there's also positioning that supports a particular bullish or bearish bent. And of late, some names that aren't there, RIVN, XPEV. So that was last week, but let's just see what they look like on your Vanna screener, which we've not used before, right? So this would be, an additional kind of tool in the toolbox to pull out. So
yeah, so you were mentioning Rivian,
XPEV, for example. Now they're doing some profit taking today, but as it relates to a swing time frame, I'm very curious. And
yeah, so this is all swing time frame, by the way. None of this is zero DTE.
Yep. Thank you.
We, just for kind of this is basically the all expiration Vanna. That's our time frame. So
got it. You
can have like a quad screener in here and just kind of putting in the stocks that you have. Here we're looking at Rivian. Just a side note, this y-axis is gamma exposure. So everybody's kind of familiar now with gamma exposure. Big negative means very volatile. Big positive means not very volatile. What we do, though, is we categorize on a trade level based on a fair price, using the flows straight from, we got the feed straight from CBOE, and we categorize in that way. We need to know the premiums. That's why we categorize it like that instead of, say, open close or something. And also with 1,000 stocks, you can't get that with open close. So, so that's how we come to our gamma levels. We are not assuming all puts are bought and all calls are sold by customers. We're not using mid price. We're not using what's the other one? The squeeze metrics one, the volatility moving thing. We don't use that. We use theoretical vols. And these are the same indicators that market makers use to determine what the fair price is. So so when I'm looking at Rivian, it appears that it says here -1, so it's the lowest Vanna it has been in the past 6 months. The volatility, however, is 0.73, which means it shouldn't be very volatile. If I look here, I mean, now this is that next step that you could kind of take from VolHacks, I look at Rivian, and I'm seeing, okay, so these are probably puts, even though we saw, like it said, -1 in Vanna, which means it's the lowest, there's still a lot of positive Vanna right here. It could still, I could expect Rivian to still advance.
Over what time frame, though? How do we use this to kind of judge a time frame?
So you can, so the all expirations, you're kind of looking at where this 20 strike is what I'd be attracted to. So you're looking at 3 minutes. We're coming out with a 3D volatility plane where you could see which expiration this is. But for now, I am going to go here, since it's only weekly options. I will look at, let's see if that 20, nope. So it's going to be a little bit longer than December. Let's see where that occurs. So we got here. Let's look at February. There it is. So I guess for next, for about January or February is when this 20 strike is there. I would say that over the time frame into 2026, you could start to see a bump. So any kind of drawdown in Rivian would be one to buy.
Excellent.
And we might see a drawdown because Vanna is high. What?
No, I said that's excellent as far as the time frame of that higher price point, but over the next month or two. So many people wanted to buy, November expiration or December expiration, and that's just not how price action, especially with an oversold play that's coming out of a bottom fishing formation, like these two EV players. They need to absorb that auction of buyers and sellers, right? There are a lot of sellers above. So they have to literally eat up all the sellers that are just happy to unload at these higher prices. And that's going to create the rejection, the price turbulence. But big picture, it's still a very nice, reversal off the bottom trend. So you're saying into January, February timeframe for, in other words, further dated options.
Yes. So I think too, also, one thing I noticed, and we're going to be coming out with historicals, I think next week or so. These right here are long puts. Customers have started buying puts. That is what you want to see if you're looking for a reversal. My projection would be Rivian probably recently we saw these put flows come in, and that's where. I'm sorry.
At 18.
Yeah, 14, 15, I think. 18 is probably when you started seeing these put flows. I kind of always say, in that option hedging kind of world, hedging is bullish, selling is bearish. You saw those selling flows, that brings you down. But then once people start buying puts, they don't want to sell their shares. They're buying puts to hedge their shares.
Yeah,
so they want to keep them. So now we are, this is kind of a bullish area here. If we drop into 14, 15 in like November, December, that's a good spot to buy.
1534. Agreed. All right. So now you probably have had this reviewed already at some point in your day of telethon here, but what have you reviewed NVIDIA's upcoming November 19th earnings and this curious date of November 25th, where Michael Burry of The Big Short fame has said he has something special planned for the market. So some intelligence on likely depreciation of GPUs, and are people hedging into the 19th earnings or into the 25th Burry event?
So, I'll take a look at it, but first let's look at the quad screener, because that's kind of what we're featuring here. Again, we're seeing the lowest Vanna over the past 6 months here, and actually more volatile. That usually means that people are trying to sell premium. So it seems like there is a lot of
makes a lot of sense.
I'm sorry.
That makes a lot of sense.
Yeah. So NVIDIA here, top of the heap. That, by the way, NVIDIA gets a lot of option traffic. It's one of the it has surpassed Tesla as the most option volume in individual stocks, other than SPY.
Yeah,
and NVIDIA. So because of that, we're seeing Look at this. So this is a lot of people buying puts and buying calls. A lot more people are buying calls speculatively. I think that, so typically what this means, speculative call buying is actually bearish. A lot of people kind of associate it as bullish because somebody knows something, so people should buy calls. Those positions are already in. Like the bullish positions, when you see these big speculative calls, they are in. And dealers, you can see here, the net VANA here is negative from above. So what I would expect in NVIDIA is earnings coming up. Then after earnings, they might even beat earnings. They beat in everything, all this stuff, and we sell off. And those are the kind of things, it's actually a good foray into a different vol hack that we have, which is just, it's very interesting. And it is this one here, the catalyst impact. A lot of times you hear, like earnings work out, earnings are great, and everybody is happy, you know what I mean? And then the market, and then it sells off, and people say, oh, they sold the news, or, oh, they did that. It's not so much that. It's not so much selling the news. It's those people who bought calls. That is their position. They've already positioned for the success. They didn't buy the stock. They bought the calls. The dealer hedging after something like that is, and after the event vol comes down, when there's speculative calls, is to sell and unwind their position. And it's not so much they sold the news. It's more, those were the dealer flows, and the people that bought the calls, they get disappointed, right? Typically, in something like NVIDIA, it's a strong retail presence, right?
So
yeah.
where is that tool? How do we use this the Catalyst tool?
So the Catalyst Impact tool is, I'll just put it right down here.
Fancy.
What this says, oh yeah, you can rearrange everything. This is all. Yeah, I mean, you can move everything here. That's our dashboard. You can recreate your workspace any way you want. And I'll talk more about the quad screener in a minute. But what the Catalyst Impact is it's showing if there is like an equal and opposite catalyst at the same time, where would price end up? And so right now there's a weak bullish bias in NVIDIA, probably because all those puts that were bought in, also. So there's a ton of puts bought, there's a ton of calls bought. Where's the imbalance? And right now we're seeing that imbalance favor bulls just a little bit.
Favorable to the calls?
Yeah, to basically because of those calls. If we go over, here's the thing too, which is why I probably wouldn't play it. But if we get over 200 in NVIDIA, we're gonna run. It's gonna run hard. Because all of this gamma right here, it's all negative gamma. You can see it here. It is going to run hard to the upside. So that's why, it's never right. It's never a sure thing, right?
Like gamma, the VANA is acting as support. Should there be the trigger to get it above, then they have to chase tails.
Yes, exactly right. So if earnings are just so much better than anybody expected, and they buy the underlying, and they buy it past 200, it can run another 10% or so. It looks like 210 would continue. I would target in between here in this 210 220 area where it could run after earnings. So yeah, if you see NVIDIA blowing out their earnings, that would be a fantastic target, is that 220 area.
Excellent. All right. So yeah, what else you got for the ball hacks? Because this is very useful.
Yeah. So the quad screener, like probably what I plan on doing, I plan on having kind of a quad screener workspace where I just add a bunch of them there, and they're all like different sectors. So, I mean, especially for someone like you who likes the macro and likes, say you're very pro financials, but you're anti healthcare, you have a quad
reverse
screener.
Actually.
Okay.
But okay. So how would I use that kind of pair trading or sector rotation, which that really isn't? Those are both quote unquote defense. But okay, so show me how, for example, the two sector rotations, usually it's growth to value or, but let's just.
So here, if I pick let's just, we could do a couple of banks. What banks do we have? JPM. Yeah, give me a couple other banks.
Oh yeah, GS, Goldman, C, Citibank. How many do you want?
Just 5. It's
okay. Bank of America,
so many
and then Wells Fargo, WFC.
Okay, WFC.
Big 5.
All right. Oh, and then BAC, right?
Mm-hmm.
Federal Reserve too, while we're at it. Central bank in there.
We actually should talk about some macro trades as it relates to GLD, SLV, TLT, the retail faves, if you will.
Okay, and give me another sector, I guess, healthcare stuff or, something.
You can use XLV. You want an actual ETF?
Oh, no, just tickers. XLV though works. What else?
But are you comparing apples to apples here? In other words, XLF to XLV, or are you doing tickers within these?
Tickers within, like the large movers.
Okay, GILD, Gilead, Eli Lilly, LLY.
Oh yeah, that's Phoenix's favorite. Anyway,
go ahead. Hit all-time highs. Yes, so we're in blue skies, I should say.
Mm-hmm.
So how many? So what's your goal here? Once you get these populated with these 2 sector ETF components, what are you doing with it?
So basically, I'm looking at not only the components, but also the higher end ETF. This is actually a great example right here. We're looking at healthcare is slightly bullish, very non-volatile. So this is deep in the green area, but its components are a little bit red, right?
Yes.
Eli Lilly is way down, very volatile, and kind of bearish. And here Gilead is even more so. Like it is kind of as
now
bearish.
That's very, very odd because Gilead is also in blue sky territory. In other words, this not blue sky, but all-time high. I'm using words wrong. New 52-week high. And it's almost in blue skies. And of course, Eli Lilly just triggered, but you're saying XLV, which is, do you have XLV? Is that what you're referring to?
Yeah.
Actually coming out of a bottoming formation because it was sold off aggressively post-Trump bump, right? And now it's coming back up. So honestly, XLV and Eli Lilly are both volatile of late, but they don't typically have a strong volatility profile. So how is the volatility computed in this?
So this is the total aggregate gamma of all expirations. So if it is strong negative gamma and strongest that it's been in the past 6 months, then it's going to register as more volatile.
That would absolutely apply for both of those. Okay.
Yes. So what this says to me is that Eli Lilly currently, people are buying a lot of options on it, probably both bullish and bearish. But this is showing that there's probably some imbalance on the bearish side. Let's take a look at maybe what its catalyst impact is.
Okay.
Oops, I forgot to change the. So if I go Lilly here, yeah, see, probably what I mean, and now this is before I even look at my charts. What I'm thinking is Eli Lilly has made a huge run to the upside after that, or maybe even could say despite that meeting in the Oval Office where the dude collapsed in the background.
Correct. Actually, even before that, but go ahead. Yes.
Yeah, it started before that. Made a huge run in which Phoenix saw, our swing trader. Huge run, and then now we're kind of in the midst of all those calls, and it's primed now for a downturn. We could
or reversion, at least digestion, sideways, something. But
yes,
we're not saying a reversal lower, but you're saying it's overbought.
Yes,
okay.
And it's into option positions that would imply a possible pullback from dealers, unwinding their positions.
Which would be logical. We literally reviewed that one this morning in my live trading room. So that's exactly what I would expect as well. Okay.
Yeah. So it seems like the two that you mentioned, which are very volatile right now, but then the whole overall sector seems to have pulled back into kind of the puts area. And now it's probably looking, it's probably very supportive. People bought puts on it because it pulled back. Now it's being supported. Like I said, hedging is bullish. And so you might have a great pair trade here with XLV going up and a bullish trade on XLV and a bearish trade on these two, Lilly and Gilead.
So that's hard though, because of the weightings of both of those components in XLV, right? So the tide lifts all boats. So it'd make more sense to pair it with something non-correlating in my world.
Perhaps, yeah, sure. I mean, personally, I kind of do it a little bit correlated. I mean, XLV pulled back when Lilly went up just like, last month, right? So it happened one way. It could happen the other too, right? I mean,
well, but this is how you are showing the strength of this outlier way over here in the quad screener, which is great as it's making its way up there. I would love to see the trajectory, like where did it come from, right, during this phenomenal advance? But big picture, it's at the top. It's now an outlier with potential to reverse or revert.
Mm-hmm. Yes.
Is that how you interpret that particular dot on the screen?
Exactly. Yes.
Okay.
Let's take a look at XLV just to give a full analysis while people watch. Oh yeah, we're in the middle of, so I would say these 154s, this kind of area. Let's see if those are puts. You can edit and down select the puts. Nope, they are calls. So people are selling calls ahead. So these are also hedging trades.
Yes.
So it's sold calls
that makes
overhead.
sense. That makes sense because it's run into the hot sun.
Yeah. Okay. Yeah. So, and that's also probably why it's seen as low volatility, because people sold calls, which means dealers are now long those calls. So probably what you're going to see is Eli Lilly pull back and XLV not move.
All right. So what else is in the VolHacks that we can kind of drum up some analysis for, some retail macro favorite, GLD, SLV, TLT, that type of stuff? How do you assess? Because that has especially the precious metals has a very, very strong macro, and the miners have a very strong fundamental tailwind. But October saw massive volatility, right? Mm-hmm. So, and this is all fine. But the point is they have come back down into that reversion type trade where they were extremely overbought, came back into some key support on a trend time frame, and then got supported again. So now do silver, do GLD, one of them, just to kind of give a overview for how they're positioned in the VolHacks space.
Sure. What's that big?
You want individual miners?
Well, we have miners in there. I'm talking about that the large silver gold ticker. XAU.
So
right?
XAU,
there's no options on XAU. Never mind.
Exactly. That's an index. So it's XAU, XAG for silver and gold, and then it's /USD.
Ooh. So this is very interesting. Silver is showing very positive. This is the highest VANA it's ever had, and GLD is the lowest. So we might see a little bit of a spread here. But GLD is also extraordinarily volatile. Another thing to kind of note.
Isn't.
What'd you say?
And silver isn't.
Well, I guess what's I could check out and see how to read this, but I think one thing with GLD. So a lot of people have bought calls on GLD. That's very interesting. So this is why it's showing as very volatile and very kind of bearish. There's been a lot of speculative call buying up here above price, and a lot more than puts. So it's not as many hedging. It's more people buying calls trying to catch the next leg up.
Yes,
gold.
Correct. That makes sense. That makes a lot of sense to me, just from a psychology standpoint, for sure.
Yeah. So it appears that like up here at like 400, you can maybe start to see upside here, but it would be a rip to sell kind of thing.
And how about silver?
Yep, let's check out silver.
This precious metals space, specifically gold and silver, hit some funding stressors at the beginning of October, which I was stalking. So I was expecting the pullback. It was also very, very overbought. You're saying they have stayed bullish during the entire pullback, even though it was a 5 standard deviation move lower in gold.
Yeah.
They stayed bullish, is what you're saying.
Yeah, I think, there is a little bit of support. I think they could actually be kind of range bound at this point.
That's okay, perfect.
In the 4,000 area.
Yep.
Silver here, similar. I think what we're seeing in silver, particularly here in 43 and 45, is a lot of hedging. I think right here is going to be, and right here is a lot of premium selling, but it looks like there's a lot of hedging that came in on silver between 43 and 45. So if there is a pullback in silver, that would be a good base. And then, but again, also with silver, kind of like gold, we could see a little bit of a range here.
Yep.
Settling in at 48, 47 area. It could bump up to 50, it looks like, but it would have to really break out of 50 hard in order to
I love it. So we are totally aligned on the range bound. Now, just from my own, tool set, right?
Mm-hmm.
So let me ask you, let me turn this from the precious metals and such and ask you, what is an example in your VolHacks and then underlying Vanna analysis that is the most bullish stock or sector ETF or the most bearish stock or sector ETF you have seen in a while?
Oh, I wasn't prepared for that question. Sorry.
I know.
I mean, basically, I mean, I focus a lot on SPX, right?
Yes,
One thing I will say for all of the stocks right now, individual stocks have been extremely range bound. There's a lot of put buying and a lot of call buying, kind of like what we just saw in gold and silver.
Correct.
And so we're going to get caught in a very volatile, because dealers are very negative gamma, but it'll be very volatile up and down. And it'll, when you zoom out at some point in time, you're going to see, oh, it's a very, very big, flag, or however you want to term it. And, it's going to be like that for probably into the end of the year. I think
Love it. We're so aligned. I literally call it the distribution zone into end of year when everyone else is extremely. Now, of course, you've got your levels for getting and staying above. I think you said 68.50, right? We could still shoot higher, but then reversion back down to retest. Maybe not a new low, but you definitely said we could still retest the lows. So, and always why I watch macro is because we need a macro trigger to interrupt the bullish flows. So even if the option market is still bullish, we could still have jobless claims finally get recorded, right? And reported. It's been October, November. So we've been a long time without real economic data that would pull forward recession risk. And then those bullish flows will be in trouble. So we need still a macro event risk. Long story short, NVIDIA, the Burry sentiment and date, the jobless claims. I don't know if the Epstein files are going to qualify, but anyway, the point is we have to have that interruption. Otherwise, I think we're going to chop sideways into end of year as well. So
yeah, I think, and honestly, with option volumes right now at records, like not even before COVID, we had average option volume of about 18 million, according to Henry, who said that several hours ago.
Oh, interesting. Okay.
Currently, what do you think? The daily options used to be 18 million before COVID. What do you think they are currently? Daily option volume.
What are they currently? It feels like maybe a 25% hit lower.
70 million options. You're talking about a 300% increase in options volume.
Wow.
So
you're not talking about. Okay, so tell me the stat again from start to finish.
Okay, pre-COVID, we had 18 million options traded.
Pre-COVID, never mind.
Yeah.
Okay, I thought I'm still thinking right now, like this month.
Yeah, this month, I mean, over the past, I think it's like 4 weeks, we have averaged 70 million options traded a day, per day. We
Per
didn't
day.
have months of that prior to COVID. I mean, it was the acceleration in options
This is
volumes
huge. Yes,
have
this
gone huge, and the result is Volland is more
critical.
is more accurate. Yeah, it's more
Yes.
critical.
But what
And
about
so-
just this month, just coming into this distribution period? Is there a way for you to know? I don't mean pre-COVID, sorry, but like, is there a way to show that we have stalled, or are we still increasing month after month after month? In other words, we had this bull run. Are we in consolidation now where it starts to kind of peter out? It's like anything else, right? Crypto, you got to keep, the shark has to keep swimming. It's like
right.
It has to keep getting bid up, whatever it is. The parabola, why parabolas always trap longs is because eventually the rate of change of the increase in that price appreciation starts to stall, and then the engine cuts, right? And that triggers volatility, which triggers liquidation. So I was more kind of talking about, yeah, options are huge. The market is ginormous. We know this. It's the tail, it's the flea on the tail of the dog. But are they starting to, in any way, shape, or form, distribute sideways in any shape or form? Have you seen that?
Oh yeah. I think that overall, I'm pretty sure, I'm expecting a lot more of downside pressure from the SPX. There is a strong kind of gamma or Vanna negative kind of outlook to the market. A lot of premium sellers. The whole Captain Condor thing, there is that on the monthly time frame as well.
So that's what I'm talking about. The monthly feels like we've dropped in usage as far as that rate of ascent has slowed. That's what I'm talking about. To me, and I don't even have the data. This is just my everyday in front of these things for 12 hours.
Yeah. Yeah. And, one of the things, this is the another vol hack that we have here, trying to kind of make it easy on people to read these charts, is what is the resistance and what is the support. We have short term, which is basically, 0 to 5 days to expiration, maybe a little bit more, 1 to 2 weeks is basically short term. We're not doing 0 DTE here. That changes too much.
Thank you. Thank you. I don't even want to look at it. So do you show it on a chart, or where do you show this, or are they just levels? These
are just levels that are based on the charts that we have. Right here, we have the swing time frame. And notice how short term can be higher than swing. So what this is kind of saying, well, now it's the same. But
that's all right, I'm refreshed.
Yeah. But the reason why that can happen is the swing is looking at expirations that are about 2 to 4 weeks, right? 2 to 6 weeks. If the
hold on. What definition is short term? You need to have a tool pop up.
Yeah, that's true. That's true.
Okay, what definition of short term? Yep, I'm writing it right now. Okay, so I want a tool tip because everyone has their own definition of time. So somebody who is a short-term trader might be intraday cash at the close. Some might be a few days to a few weeks. Like that's my definition of a chase time frame. And swing to me is a few weeks that goes to a few months. And trend to me is a few months that goes for a few years. So, gold is in a solid trend higher. And so what happens on a short-term time frame, trend traders don't care so much, right? Yeah. So definition of short-term, swing, and long-term, for me, that's the chase, the swing, and the trend. So anyway,
that's really great feedback. I'm going to we're going to do that. We didn't put tool tips in there. But short term though is just looking at the 1 to 2 week area of Vanna. And so if there is a big strike in the swing time frame, which to me is 2 to 6 weeks, and it's not in the short term, you can have a resistance in the short term that's higher than swing. We are not technical analysts here
Yeah,
at all.
this is perfect because then I can align it with my technical analysis. So this is very helpful. Okay.
And then long term is the all expiration. So it is it could be about 3 to 6 months out. 6 weeks to about 6 weeks to 6 months, basically.
Got it.
We see here this plus 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 under support. It could also be a quote minus minus minus. Plus 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 means that there is a lot of support, and that there is, there's no indication that we're going to see any major downswings in the near future. Right now, we've kind of already pulled back. Now we're going back up to 6,900. Probably what we have seen here is puts being bought in the swing and long term. So December puts, and maybe even like further out. Mm-hmm.
So you basically, this is a confidence indicator, unless you see lower. Does it bring into the gamma flip, consideration or not?
Yes.
It does. Okay.
Now it's a Vanna flip, but
Okay.
Gamma. Yes, it brings. It's the consideration of, how far you can see some strong puts and strong call Vanna areas, and those tend to be support and resistance. So if you see the pluses here, it is strong support. You're probably, we're not going to see much downside. And this has been the case now for the past couple of days. So
but for the most part, the short term 68.15 and 68.50, without my glasses, I can't say 68.90. Got it. Okay. That's resistance. All right. So what else? Cause I know we're
running short on time. We do have one more vol hack to do.
Show me. Yeah.
One of it's kind of become my calling card on X, which is my over VIX, my vol event indicator that has been successful 26 out of 28 times since 2015.
Amazing.
I had a spot vol correlation, and it's coming back, a spot vol correlation widget that was supposed to show that. It needed further simplification. So this widget right here, the spot vol betas, this is showing if we are over VIXed and if we are under VIXed. When we have a medium, when I size it up to medium, it will show you all of the active vol events, the trigger date, the target price, and then the deadline. So, every time that we have a strongly over VIX drop, you'll see this gauge go down, and this number will get above 2. You'll get this populated, a trigger date, which would be the day of the over VIXing, the target price, which will be the close from the day before, and the deadline, which will be 3 weeks after the trigger date. So that is, this is trying to simplify that calling card kind of indicator that I've had.
Okay, so let me just interpret this because I can't see any data. So if you had a trigger date where it literally VIX hits a particular number, what's the last time that you did this? Because I remember it was very accurate. You posted it. Was basically beginning of October, right?
What was that? It was the drop that it dropped like SPX dropped like 2 point something %. I think it was when Trump did that truth thing with China.
That was on 10-10, and we dropped 2.81%.
Yeah,
VIX went up like 5 points.
There you go. Okay. Thank you, Hunter. Okay, so about beginning or middle of October. So then this would then say, okay, then we need SPX to go back and tag whatever it is, 6,800 within the next 3 weeks. Or
that's correct.
If I remember correctly, you said by the end of Halloween, that was it. And it actually
did it next week.
It did it the next week. So the market is very reflexive now. It doesn't take as long.
Yeah. I mean, we had one failure during the Liberation Day stuff. And it triggered, we actually had 4 triggers. So we're going to have to grow this out for the next time that happens. We had 4 triggers, and the first one didn't succeed, but the last 3 did. So, and we recovered that first one, I think, like just 2 or 3 days late. So,
we had a 10% S&P day and still didn't get it. So, you can't really, discount it, but we did
Yeah, I
have
was
a
going to say
10%
that was an
payment.
anomaly. That was a freak of nature, is what I call that. It was intervention. No, that was pure intervention. Anyway,
Yeah.
okay.
But if you took all 4 trades, then you came out on top on 3 of them. So that's pretty. You'd still probably make money, but.
Awesome. All right. So this is lovely. This overvixing tool, you've got your quad screener, you've got your catalyst impact, and then you've got your basically your support and resistance, not just SPX, but also individual stocks.
Yes. The only thing here that is only SPX is the spot vol beta. So, you were talking before about NVIDIA. You can get that for any of the stocks. Same thing here with extremes. We can check out NVIDIA.
Oh, that's
here.
right. Oh, you can get that for also the individual stocks. Well, that's new. Before, your overvixing was exclusive for SPX.
Well, this is exclusive for SPX. When we re-release spot vol correlation, that will be for all of them. But you kind of also need to know context on all of them. Like, just if I put like Microsoft in the spot vol beta, every earnings it will trigger a vol event. Yeah. So you need to know context in individual stocks. So we didn't put that in the oversimplified version. But when you have like NVIDIA, we have the support and resistance areas. It looks pretty, even though the quad screener is showing low VANA, the NVIDIA extremes here is showing very positively, right? A lot of support. And the resistance is that 200 that I was talking about before, 202.5. So yeah, I mean, and we're hanging up here at 192. So that's kind of that swing time frame VANA that's pushing us down a little bit. But overall, I think the structure is good for NVIDIA for earnings.
Excellent. Well, this is very exciting. And yes, you simplified it. There's still some context, needed on how to use, but for the most part, it's very straightforward and looks good. Thank you so much.
Thank you very much, Samantha, for coming on. Thank you for inspiring this. So appreciate it. And now for closing remarks, thank you all for joining us for this segment of Volland Refined. Thank you to Samantha LaDuc for joining us. If you're watching this on YouTube, you can go to the description of this video to get the links to all 8 segments. Don't forget, you can subscribe to Volland at whichever tier is best for you at www.Vol.Land. Also, if you are a LaDuc Trading subscriber, please come to the Volland Positioning Room. You will get a special LaDuc Trading coupon code where, I'll just leave it at that. But also visit LaDucTrading.com. Can you give yourself a little plug there, Samantha?
No, this is it. We run obviously a financial research firm with live trading rooms, and Jason contributes greatly in his dealer positioning analysis. But these tools are very helpful for especially those who are more swing trading, but they do the 0 DTE, hunters on top of that. So there are complementary. It's wonderful to have tools that then can be cross-referenced with technicals. And then, of course, we dig into the macro and the intermarket and the fundamental. But the quant tools are absolutely critical to have in an option-driven market. Huge. So congratulations. I really like this relaunch, this refined Vol.Land and the VolHacks in particular. I think they're going to be very useful for clients.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.